Good morning, and thank you for tuning in to another edition of the Vulcan Report. Well. What do we have here? This here is a chart of the gold futures. And I wanted to start off with the precious metals today, just to give you an idea of where we are and where we might be headed. Okay, if you recall in the prior video, excuse me, I pointed out that as you can see, we're moving back toward the blue trend line here. Okay, that's your well-established downtrend line. All right, when prices are trading below this blue trend line, it means we're in a downtrend. When prices are trading above this blue trend line, then we're in an uptrend. Okay, and as you can see, we're in a well-established downtrend. You can also see the negative momentum is locked in, hence this red bar here going across. All right. As of yesterday's close, we tried to come off of this downtrend lock. All right. We tried to come off the lock. So gold is trying to make a positive run here or start a positive momentum here, like you had here. But as you can see, it didn't do anything. All it did was continue to go down, even though we showed signs of increased buying momentum. All right. Hence these spikes up here like this. That shows you that there's buying pressure trying to come into the market, but they ultimately lost out to the bears. And the bears just came in and sold any kind of intraday rallies. And that's pretty much what the pattern has been in these precious metals, and I don't see that changing anytime soon. Likewise, you can see the widening gap between the purple T line and the red K line. Okay, as that expands and gets wider, you have even more strength and more price acceleration to the downside, and you can see it's becoming quite enormous. Another thing to take note of too is where the Kumo cloud is, where the bottom of the Kumo cloud is. The bottom of the Kumo cloud, if you can see it, is right up here above the 1285 level. All right, that's that's a long way away from here. All right, a long way away from here. Um, I don't see us getting back there anytime soon. That's a lot to have to rally and make up for, and we'll still be in a bear market. All right, the long-term trend would still be bearish if we got there, but the short-term trend would be turned to bullish because we'll be trading above um, this trend line here. Okay, so that's going to take time. Who knows how long that could take, and who knows how much further down we'll fall before trying to make a run for the bottom of the Kumo cloud. But first things first, we got to get above this blue line trend line resistance, and that's proven difficult too. And that's back here around this 1225 level. All right, so again, gold is really going to have a lot to try to make up for. It's going to have a lot to do to push that momentum forward. And again, I just don't see that happening anytime soon. So, I mean, we'll wait and see. I know they always say never. You never know what can happen, but we'll just have to see. All right. Okay, now let's switch our focus to silver. As you can see, silver is pretty much the same picture. Here's the Kumo cloud here. Prices are well below it. Bottom of the Kumo cloud is back up here around the 1980 level. The blue trend line is pointing down. When we blow this up, you can see that we tried to become bullish here. It's trying to start a bull run. Here is a green momentum bar that's trying to form. We'll see if it can, or this is just going to be a one-day wonder. Again, like gold, I see all rallies being beaten down. Right here, we got sold. Right here, we got sold. Right here, we got sold. I believe they're going to try to sell this. Excuse me. Sell these 2 points too. Okay. We are definitely trying to form a new trend. a bull trend, which means silver is going to try to make it up toward that blue trend line resistance handle. And right now, the blue trend line resistance handle is around 1782. Okay, so that looks like that's what the silver wants to do. It's trying to break away here. It really is. I don't know if it's going to be successful because, like I said, all these rallies seem to be getting smashed to the ground, and they don't last very long. So I don't think we're going to be successful with that run. But we'll have to look and see. But I suspect we're going to drop back and take out the weekly support, and the next target should be about $15 in the silver. Oh, and another thing to watch for here is going to be the 1706 level. That 1706 level is going to be an inflection point. A close back below 1706 is going to reestablish the downtrend, and that's where you should see price momentum accelerate to the downside. So watch that 1706. It should be support if we're going to try to make a run for the that blue trend line. If not, that 1706 is definitely going to be a price inflection point on an intraday to beat prices down even further. Swing trade is going to be 1661. All right, 1661 should be your swing trade to the downside. All right, 1661. If that happens at the 1661 level, then like I said, 15 should be right around the corner. And as you can see, the trend is still very bearish. All right. Over the next several days, I'm going to be working on the commentary chart, so you can see the actual technicals on here. I've been working on that, trying to update that. So just bear with me on that, and we'll see where we go from here. But you can see here the bot checks. Those of you who've been with me for a while, you remember my bot checks. Well, the trend channel that I was telling you about it being up, it means that positive momentum is entering the market. So expect sideways to higher prices within the next 3 to 5 days, and that's what this bar is here from October the 7th. That's what happened. All right. Even though we closed down, it's still, as you can see, positive momentum entered the market, and that's kind of what the algorithms do. Is we look at price points and price inflection points. We look at, you know, um, all types of things. You look at the bid and ask spreads and the put to call ratios, and we crunch just hundreds of numbers, and it comes out with the price inflection points, and that's how we determine what we're going to do and how we're going to take advantage of any situation. And majority of the time we do stop and reverses and just a whole bunch of different techniques and things that we do to enhance profitability in trading, and that's just how we do it. So we're constantly in the market, either long or short. We could be long today, short tomorrow, and things like that. So just keep that in the back of your mind for all of you new listeners. All right, that's kind of how we roll. All right. Okay. Well, with that said, let's move on. Okay, this is crude oil futures. Here's the tiny cloud right here. Here's the trend line. All right, and you can see we're below both, accelerating to the downside. You see this red bar going across. That's negative momentum, strong negative momentum within the downtrend. And you can see that's happening right now as we speak. It is locked in. And let's blow the chart up. As you can see, this is a weekly chart. Let's pull up the daily so you can see what else is happening. All right, this is your radical chart. This is your crude oil chart. Take a look at it. It's crazy happening. All right, so let's take a look. Let's see how the momentum's been picking up. Again, rallies are being sold. Okay, even here where the market actually on September the 24th, crude oil turned bullish and tried its heart out to make a big run, a big push. We went from the 93.28 all the way up to 94.93. Okay, so it really tried to make a push. It really tried to make a run. It just could not hold it. It actually started running into trouble, even though you really couldn't tell it with the naked eye. But on the September 29th is when it really ran into trouble. Even before September 30th, huge sell-off. All right, because the market, even though it closed above the price inflection point, it still spiked below it on an intraday basis, which is weakness, a sign of weakness. All right. Then the following day, it just fell out of bed. That's crude oil is like a day trader's dream of a market. If you're going to day trade it, it can be day traded successfully. All right, it's because it's so volatile. It's like the most volatile market out there in the futures market, and it's not illiquid. It's very liquid, so you can get in and out and do what you need to do in this particular market. So just keep that in the back of your mind as well. If you want to find a vehicle that you're looking to trade that you can get in and out of and has enough volatility where you can, you know, do what you need to do. You may want to entertain the crude oil market for that purpose. Okay. All right. So let's see. I'm thinking because it's so hard to know what oil will or will not do. Even though we're locked into this downtrend, even though we popped above the trend line here and popped above it here and then fell down, that's been the pattern with this oil. The talking heads yesterday on CNBC was saying how crude oil could drop even lower. I don't think we will ever see crude oil in my lifetime back to where it was when I first started working on Wall Street. I remember crude oil being $15 a barrel. All right, so and that really wasn't all that long ago. It really wasn't. Um, we're talking, between 1999 and 2001. Crude oil was cheap, man. I think we used to get pops up to $30 a barrel, but that was about it, man. It just did not happen. Now, even though it's fallen from this $100 a barrel, I'm sorry, $100 a barrel watermark, high watermark. That's kind of like the new trend line now, the $100 a barrel. You fall below it, and then prices like to bounce around at that $88 a barrel handle I told you about. Prices love to overshoot targets, so it's overshooting the target, and I don't know where it's going to stop, but I just don't see it staying below $100 a barrel for long, regardless of what the macroeconomic picture looks like. Remember, prices and markets sometimes do not give a darn about your econometric models and things of that nature. Prices are going to go where they go and do what they do. They just don't care. All right, that's just something to keep in the back of your mind as well. All right, with that, let's take a look at just the Russell real quick. I just want to show you something with that. All right, remember I said the Russell was leading the market down. Well, that's exactly what's happening here. Here's your Kumo cloud. Here's your trend line support right now. All right. These are your price inflection points right here, and these little orange dots. These are your price inflection points. And as you can see, the market on October the 3rd tried to establish a bull run. It tried to get some momentum in there and just failed and could not do it. So we'll have to see what's going to happen. But these rallies are being sold. That's just how it is. In a downtrend market, I don't care what the market is, rallies are going to be sold. Conversely, in a bull market, corrections are going to be bought. It's just how it is. Let's see, nothing really to speak of on this side of the chart as of yet. I need to work on that. But anyhow, this market's looking really weak. So can we bounce from these levels? Of course we can. Even though the downtrend is locked in, it's the red bar going across here. We still got to keep an eye out for these price inflection points. The price inflection point for October the 8th All right, it's going to be 1087.8 or 1087.9, we can say. That's going to be the price inflection point for the Russell to watch. Now, the market is a long way away from that, but just watch that. A close above that would be would mean that the market once again is going to try to form another bull leg to try to get up and test that resistance. We'll see. Right now, I don't see that happening. You know, it's just the markets have been doing what they're going to do, and they're going to go where they're going to go. This is a well-established bear market. I don't care what anyone says. This is a bear market. Below the blue trend line, below the Kumo cloud, negative momentum locked in, bear market. But then they'll say, oh, what about the weekly chart? Well, let's just take a look at the weekly chart then. Let's just put all that to rest, shall we? All right. Here's your weekly chart right here. All right. Here's your Kumo cloud that we are now trading inside of. Hard to see with all the colors and everything, but here's that bar. I just want you to see the Kumo cloud, because sometimes these Kumo clouds can get enormous, like this one. Here's the bottom of the cloud here at this 1050 level. Here's the top of the cloud here at 1150. So that's a 100-point width in this Kumo cloud here, which is incredible. But where are we? Okay, this 1050 is support for the Kumo cloud. As long as we stay above the 1050, you can make an argument that we're still bullish, or have some bull life, a weak bull pulse, if you will. But we're trading below the blue line, bearish. Now we're trading inside this Kumo cloud. All right. Also, this is the Kumo cloud of death. This is where trends change drastically. If we drop below this Kumo cloud, then the long-term trend will be bearish, along with the short-term trend. Short-term trend is bearish. Long-term trend is yet to be decided. Okay. As long as we stay above this Kumo cloud support, you can say that this 1050 level will be bought heavily, defended heavily by the bulls to push the market at least back up toward the top of the cloud. But the cloud could also correct. Things happen, with these markets. So you see, the cloud is not always that wide. All right. See, it can get really narrow, very narrow. Get that out of there. See, like here, this is more normal right here. All right. See how the market went from huge width, and then it just, over the next couple of weeks, it changed. It narrowed in. That's my point. This big storm cloud can turn into nothing. All right. And then act again as support for the market. So I just wanted to bring some of those things to your attention. I just wanted you to see that and see how these markets work, see what's what, to get an idea of where we may be headed. Okay. So with the, let me just make this smaller. I'm sorry, bigger, so you can see it again. Okay, here we are. All right, so this is where we are. So the Russell's leading the markets with extreme weakness, and it's just going to continue to pull the Dow, the S&P, and the NASDAQ down with it. All right. So remember, take what you can and give nothing back. Have a great day.